Welcome to the Beginner Investor Podcast. I'm your host, Luke Burke, and I want to talk to you guys today about the big news that's coming out next week. Let's get started. All right. So if you follow the market, if you follow the stock market, and you follow the economy, you'll know that next week on September 16th and 17th, the FOMC, the Federal Open Market Committee, are going to have their annual or their rate meeting to decide if they're going to cut rates or not, is what everyone is waiting on right now. Okay. So I want to kind of give you some information on what they're talking about when we're talking about cutting the rates and why they want to cut the rates and why it's important going forward for our economy to see the rates cut if they decide to cut them. So I just want to kind of talk about, so next week on the 17th, they're going to announce their decision. Everyone is expecting them to do at least a 0.25. Now, with the previous CPI, PPI, August jobs report, and jobless claims report, everyone seems to be leaning towards that there's going to be at least a 25 basis point cut. Some even think that it should be a 50 point basis cut. Some people think we should have gotten cuts a while back, but we didn't get the cuts. So how do these cuts impact you? So let me get back to the basics. So when you're cutting rates, you're hoping to stimulate the economy. When you're tightened, like when the Fed tightens like they're tightened now with the rates up high as they are now, people the goal is to have people spend less because you're trying to slow down a hot economy. A couple of years ago, our inflation was up 9 to 11, I think it was 11%. So when you see stuff like that, you have to slow the economy down because you ideally only want to keep inflation at the 2% level. And when it gets that high, you have to tighten. And when you tighten the rates or raise the rates, you're discouraging people. You're discouraging stimulation in the economy because you want to pull that interest rate back. What we're facing right now, you actually want to stimulate the economy even more. So now you want to pull back on those rates. You want to loosen up those rates a little bit, and that's what they're talking about with the Fed. So to give you an understanding, so you think about it this way: when you're loosening up rates, you're trying to stimulate the economy. When you're tightening rates, you're trying to tighten everyone. So how to tighten the spending and tighten the economic activity. So how does this impact you? So when they cut the rates, this actually lowers the amount that banks are able to borrow from each other, which in turn we hope that it will also impact the consumer and make their borrowing less, therefore making it cheaper to spend, or cheaper to spend and borrow, therefore stimulating the economy because people are going to be more willing to spend. All the economic data I've seen that I watch through these meetings and these reports that come out almost weekly, it seems like, it seems like people are still spending, but inflation is still coming down, which is, in my opinion, a good sign that inflation is still coming down, even though people are still spending. So the concern that the argument that's happening right now with the Fed is that the Fed, I believe the Fed is concerned that if they cut rates too soon, then it run the risk of inflation going back up really fast. And a good example of this, I believe the book that I read, The Intelligent Investor by Benjamin Graham, it kind of talks about this, how this happened in the 70s, how they cut rates too soon. And when they cut rates too soon, that's when inflation skyrocketed. And I believe that Chairman Powell and the Federal Reserve has been trying to follow that model, try to learn from that time period. Because if you really think about it, over the years, how history has really repeated itself, even going way back to the Spanish flu, then, to our pandemic. Then from there, they went straight from the pandemic to the Roaring 20s, right? So you go from 1918, then you go into the Roaring 20s, and then everyone knows what happened in the 30s. We had that Great Depression. That's not what happened with this. That's not what we're talking about with the 70s. But watch I believe that the Federal Reserve has really been studying history and the reason why they've been doing things the way they've been doing. Um, that's not, that's just my opinion. I'm not a economist, but that's just how I see things. So anyway, if you ever read the book, The Intelligent Investor, if you really want to see what's happening right now, go read the parts where they're talking about how inflation, that inflation creep and how it comes up and how it hits hard and how it impacts the economy. So if the Fed cuts the rates on the 17th, ideally it will be cheaper for consumers to spend. Therefore, if it's cheaper for consumers to spend, they'll spend more. If it's cheaper for banks to borrow from each other, they'll spend more. And when I say it's cheaper to spend, you might see an impact on your credit card. Your credit card rates might start to go down, or your car rates, might start to go down. So you might have some opportunities to refinance. Now, these don't directly change like overnight. But over time, you hope that that's what end up happening. And then again, you run the risk when you're cutting rates. You can't cut rates at the rate that you raise rates, because when you're raising rates, you want to stop. You want to stop the economy from moving so fast as quick as possible. When you're cutting rates, you don't want to go too fast with that, because if you go too fast, then you run the risk of causing inflation, and that's not what you want to do if you're the Federal Reserve. So anyway, long story short, we'll get our decision from the FOMC on Wednesday, I believe, September 17th. I believe they will cut rates. I think that's the general consensus, that they will cut rates. I think the economic data has been well enough for them to cut rates. I'm a little cautious sometimes. I probably would hold one more cycle, but that's just me. I'm not a professional economist. These people are, these men and women are, they know what they're doing as far as, predicting those markets. I just enjoy bringing the information that I have to you. So that's what you're going to watch out for next week, for the Chairman Powell to say, hey, we're going to cut interest rates. And again, it's not going to immediately stimulate the economy, but it'll be a good start to stimulating the economy. All right. So I hope you learned something in this video. I hope that you like and subscribe this video. My goal is to bring you as much information as I can as we continue to watch and follow all the economic news and all the economic data that is coming in. All right. Thanks for watching.